Meetings were held this week in a context of persistent global uncertainties, a prolonged Middle East conflict, and domestically, an economic context dominated by high growth, economic resilience, but also elevated inflation. And this quarterly briefing reflects our commitment as central bank to maintaining price stability, maintaining financial stability, and to transparent, data-driven, and forward-looking policy making. And so I will begin this presentation with the Monetary Policy Committee's assessment of recent economic developments, of inflation trends in the second quarter of 2026, as well as the outlook for the rest of the year. And these are the insights that have guided the committee's decisions as it works to preserve price stability, support strong, sustainable economic growth, as well as the purchasing power of Rwandans. The committee started by examining the impact of persistent supply shocks due to the closing of the Strait of Hormuz. As you all know, the conflict in the Middle East, which started with the Iran war at the end of February, led to the closure of the Strait of Hormuz, where transit goods were transiting more than 20% of oil supply, global oil supply. There was a ceasefire agreement from mid-June to the first week of July, and that's where you see on the chart on the right, resuming of shipments. However, that reopening was short-lived, leading to renewed shipment disruption in the Strait of Hormuz, and that's the lower shipments that we see at the end of July 2026. And so this confirms that increased import production and distribution costs globally will continue to put price pressures even on the domestic market. Looking at the recent shocks on crude oil prices, as a committee, we looked at the trend in the last 6 years of oil prices, where we observed that in the last 5 years, that's where we've had peak of oil prices. First, in 2022, having a barrel of oil above $100 a barrel, reaching $116 per barrel in June 2022, after the Ukraine war had started disrupting the supply of crude oil. And again, the peak we've had since March 2026, where oil prices started to rise, peaking at an average of $103 per barrel in April this year, due to the disruptions of the Strait of Hormuz, but also the conflict in the Middle East. And so this is the context in which governments across the globe are taking policy measures or started taking policy measures to mitigate the associated risks due to the oil and gas markets, more where the prices became increasingly high. The measures were in three categories. First, fiscal measures, trade measures, but also measures to manage the supply and demand of energy. As an example, for Rwanda, the government put in place fiscal measures as temporary subsidies on fuel. There's a dedicated bus lane and the use of electric vehicles that has been encouraged, urging the public to avoid unnecessary travel. These are examples of government measures that were also taken to curb the rising energy prices, especially fuel prices. Some countries have put in place trade measures, including price controls and import policies. And in our context, there were also government-to-government fuel import agreements between Rwanda and Oman, but also between Rwanda, Tanzania, and Kenya to help secure fuel supplies at a stable price. On management of energy supply and demand, some countries put in place work-from-home policies to really reduce the demand for fuel, as well as diversifying the sources of energy by turning into, for instance, the use of electric vehicles, and Rwanda is among those countries. So we wanted also as a committee to look at complementary measures being taken by governments to supplement monetary policy in curbing inflation that's driven mainly by high costs of energy products, especially fuel and gas. As a committee, we continue to examine the developments of the global economy as well as trends. Global economic growth is projected to decline to 3% from a growth of 3.5% we had last year, and pick up again in 2027 with a global growth of 3.4%. In sub-Saharan Africa, there will also be a slight slowdown of the economy with growth of 4.3% projected for 2026, with economic growth picking up again to 4.5%, which is the level that we had for sub-Saharan Africa in 2025. And these challenges or slowing down of the economy, especially in sub-Saharan Africa, are reflecting challenges of higher import costs, particularly oil, gas, and fertilizer, due to the conflict in the Middle East. And for the global economic growth is lower than initially projected at the beginning of the year, with the impact of the Middle East conflict and supply chain disruptions and global trade. On inflation, the current geopolitical issues, energy crisis have led to increased inflationary pressures. For global inflation forecast, these are data that we have from the IMF. 2026 inflation globally is projected to increase to 4.7% from 4.1%, but declining in 2027 to 3.9%. For sub-Saharan Africa, the region had a double-digit inflation in 2025. That inflation is projected to slow down to 8.8%. However, the disinflation path for sub-Saharan Africa is not as high as expected because of these challenges we're having on high energy and food prices, and for some countries also high depreciation. And for sub-Saharan Africa in 2027, the inflation is projected to stabilize but still high at 8.8%. On international commodity prices, we analyzed the trend for energy prices. Obviously, energy prices, it's not a surprise. On average, they will increase by close to 24% in 2026, before declining and reducing by 17% in 2027, if no other disruption on the energy markets is encountered. For crude oil alone, the increase in prices on average will be around 32%, but there's a decline projected from the high oil prices that we will have in 2026, with a decline close to 12% in 2027. The non-energy commodity index include non-energy products, including food prices, projected to rise by 2.8% in 2026, before dropping by 2.8% in 2027, reflecting, one, the projected higher fertilizer prices that will influence food prices, as well as rising transport costs driven by higher energy prices. Looking at food alone, food prices globally are expected to rise by about 2.4% throughout the year, and a slight increase in 2027 of food prices, but lower than what we will have this year at 1.3%. We also looked at mineral prices, which are projected to increase by close to 17% in 2026, driven especially by higher demand for precious metals, especially in the manufacturing sector, and electric vehicles also demand as well. As a committee, we analyzed our external sector. Very good performance of exports, increasing by 51% in the second quarter of 2026, that is from April to June. However, imports also increased by 28%, especially imports of capital goods to support major projects in the country, and the merchandise trade deficit widening by 13.8%, that is for the second quarter. However, looking at January to June data, exports, especially in the first quarter, had performed significantly higher, and in the 6 months, exports have increased by 51%, while imports also increased, but at a lower pace than exports. And so the trade deficit widening is contained for the first 6 months of the year at 1.1%. And this is reflected in the stabilization of the Rwandan franc versus the dollar, where the depreciation was less than 1% in the first 6 months of the year, and this is compared to close to 3% in 2025, the first half of 2025, but even higher depreciation rates we had in 2023 and 2024. So as a committee, we were reassured by the stabilization of the Rwandan franc, primarily driven by availability of foreign currency, not only from exports, but also growing remittances and foreign direct investments, but as well as the continued effects of the reforms we conducted in the foreign exchange reforms since 2025. As for the Rwandan economy, it continues to remain resilient with a very high growth in the first quarter of 2026 of 10%. The data for GDP growth in the second quarter have not yet been published. They will be published next month by the National Institute of Statistics. However, internally as Central Bank, we use a composite index of economic activity to project and measure the economic momentum, and we can see that even for the second quarter, we expect to see sustained growth in aggregate demand, driven by solid performance in trade, wholesale and retail trade, but also financial services, manufacturing, mining, and construction. And that's the growth numbers you see using the composite index of economic activity for the second quarter. The economy is expected to remain resilient in the second quarter of 2026, but also throughout the rest of the year, supported by continued good performances, especially in the services and industry sectors. But these economic outlooks remain subject to downside risks arising from heightened global uncertainty, ongoing Middle East conflict, and these developments could constrain economic activity during the second quarter, as well as subsequent quarter in 2026, through higher energy and import costs, as well as supply chain disruptions and weaker external demand if this conflict in the Middle East is prolonged. The committee also assessed monetary conditions in the second quarter of 2026. The interbank rate, which always follows the central bank rate, increased to 7.73%, which was to be expected once we also increased our central bank rate in May to 8.25%. For the deposit rate and lending rate, there has been a very slight change because these two rates take more time to follow the central bank rate movements. And so we expect that over time, that's where we would see more impact on the deposit rate and lending rate. Actually, for the lending rate in the second quarter, it's slightly reduced to 15.8% compared to the 15.9% we had in the same period in 2025. So from recent developments, we observed that the interbank rate moves closer to the policy rate, while market rates are yet to fully adjust to the tightening of monetary policy, reflecting the structural characteristic of our market and limitations in the monetary policy transmission mechanism, which still requires further financial deepening. On inflation developments, as a committee, this is the last set of analysis that we conduct. In the second quarter of 2026, year-on-year headline inflation increased to 13.2%, and this is from 9.8% recorded in the first quarter of 2026. And this increase really reflects increases in all components of inflation, being core inflation, fresh food, or energy inflation, with core inflation increasing to 12.3% in the second quarter, fresh food inflation rising to 7.3%, but energy inflation is the one that had significant increase, increasing to 45%, given the very high oil prices in the second quarter of 2026. And when we look at July 2026, headline inflation continued to increase to 14.5%, and this increase was reflected in fresh food inflation, which accelerated to 16%. In core inflation, and energy inflation also remain in double digits at 11.4% for core inflation, and energy inflation at 44.8%. And so these are developments that are above our target range for the two quarters of 2026, above our upper limit of 8%. And the inflation projections that we considered as Monetary Policy Committee for 2026 is that our headline inflation on average for the year will remain above 8%, projected to be on average at 13.1%. But inflation will gradually return within the target range in the second half of 2027, where projections at this point in time indicate that headline inflation on average for 2027 will be around 7.9%, so below our upper band limit. And medium-term inflation, as I mentioned, for 2026, still above 8%. And the risk to this outlook, which means which are events would even drive inflation higher than those projections. One is adverse weather conditions related to El Nino, which is the global climate pattern that may cause floods or droughts, not only in our region or in our country, but also across the globe, hence also impacting imported inflation. There's also a risk that is linked to the prolonged conflict in the Middle East. And so if those risks were to materialize, we would have a higher inflation, and this is why the committee will continue to closely monitor those developments and take appropriate action to safeguard price stability. And so in view of more persistent inflationary pressures, as I just mentioned, an upward revision of the inflation outlook, the Monetary Policy Committee decided to increase the central bank rate by 50 basis points. This is 0.5%, from 8.25% that we had in May to 8.75%. And this is the central bank rate that will be in place for 3 months. And the decision to increase this central bank rate is a measured step to bring inflation back within the target band, to safeguard price stability, which is a necessary condition to sustain economic growth, but also protect the purchasing of power of Rwandans in the medium term. In addition to the MPC decision, there are other public policy measures that have been undertaken to ensure that inflation is contained, and a number of them were highlighted in this presentation. And as central bank, we continue to work closely with the Ministry of Finance and Economic Planning to make sure that we continue to have appropriate coordination between monetary policy and fiscal policy to reduce the inflation and bring it back within our target band of 2 to 8%, and in the medium term, reach a headline inflation of 5%. And so as MPC, we will continue to closely monitor inflation and economic developments, and we stand ready to adjust our policy if inflationary pressures intensify beyond our projections. So this marks the end of the presentation on the Monetary Policy Committee meeting, deliberations, and decision. And with that, we will now proceed with an update of the Financial Stability Committee meeting. So the FSC assessed the performance and stability of Rwanda's financial sector in light of the uncertain global environment, longer than expected Middle East war and tensions, as well as the domestic economic context amidst elevated inflation. The committee concluded that our financial system remains sound and resilient. However, there are emerging risks and vulnerabilities that require constant vigilance. The FSC is committed to reinforcing efforts that ensure financial stability, transparency, but also public confidence in Rwanda's financial system. And this presentation will detail the reasoning underpinning the FSC's conclusion. First, the Financial Stability Committee noted that Rwanda's financial system continues to expand, with financial sector assets reaching 17.5 trillion at the end of June 2026, which is a 23% increase from the same period in 2025. And this high growth was driven by deposits, a substantial increase in deposits, increase in insurance premium, higher investment income, as well as higher pension contributions. As a result, financial sector assets to GDP reached 68% at the end of June, and an increase from the 66% ratio that we had in the same period 2025. The committee examined, analyzed the funding structure of our credit institutions, this is banks and microfinance, where the growth of deposits overall was 16.5%, reaching 7 trillion Rwandan franc at the end of 2026. And these are deposits in banks, but also microfinance institutions. The short-term deposits remain dominant in banks' deposits, accounting for 88% of total deposits. And this, as a committee, leads us to believe that that exposes banks to potential funding concentration and liquidity risk if banks and microfinance deploy short-term funds towards long-term credit, and this is a risk that we will continue to monitor as Financial Stability Committee. And so while we noted growth in lending across banks and microfinance institutions supporting economic activity, we also analyzed potential asset and liability mismatches, and we'll continue to monitor the way in which credit institutions manage their funding structure while growing their loan books. Indeed, when we look at outstanding loans, they increased by 22% to 7 trillion Rwandan francs, banks being the largest sector that's lending to the economy, with outstanding loan of more than 6 trillion, and microfinance institution lending at the tune of 834 billion Rwandan francs, and with an increase of 27% if we compare the first half of 2026 to the first half of 2025. And the third category of lending institutions and loan deposits taking financial institutions that do only lending, which have seen their outstanding loans increase by 49%, but this is from a lower base because they only represent 1% of total financial sector lending. And the increase in lending by non-deposit financial institution was on the back of expanded development financing, but also targeted lending programs. The committee examined the sectors of the economy that are benefiting from credit. Starting with, we can see that construction remains the largest finance sector, with its share increasing from 19% of total loans in 2025, the first half of 2025, and to 23% now of all outstanding loans in the first half of 2026. The second sector that's being financed by credit institution is trade, followed by households as well as manufacturing. We observed early signs of greater diversifications towards sectors that are supporting Rwanda's economic transformation. In the first half of 2026, new lending to agriculture increased by 177%, reaching 57 billion, and its share of financing now it's increasing and has reached 5%. And manufacturing, that I talked about it, is another sector that we monitor because it's part of priority sectors. Mining is still lagging behind, but we see that there's an increase in credit going to mining in the first half of 2026 compared to relatively no credit in the first half of 2025, which is a good development, but more progress is required. Looking at the asset quality of lending institutions, the non-performing loans in banks, in microfinance institutions, and non-deposit taking financial institutions is well below the maximum of 5%. In particular for banks, the non-performing loan ratio slightly increased to 3%, but remain below the 5% maximum, reflecting a downgrade of a few clients. And that's why we see a slight increase in NPL at 3%. For microfinance institution, the ratio improved, reducing to 2.3% at the end of June, while there was a significant improvement in asset quality for non-deposit taking financial institutions, with an NPL at 3.8% compared to 7.5% in the same period last year. On stability indicators, banks and microfinance institutions maintain adequate capital buffers well above the minimum requirement of 15%, with banks slightly increasing their capital adequacy ratio to 22%, and microfinance institutions having a capital adequacy ratio at 30%, following conversion of retained earnings into paid-up capital. So credit institutions continue overall to hold adequate capital buffers, enabling them to continue extending credit, but also be able to withstand any potential shock. On the liquidity side, lending institutions maintained sufficient liquidity buffers to fulfill their short-term obligations, with the liquidity coverage ratio above 100% for banks and above the minimum required of 30% for microfinance institutions. Overall, the ample liquidity in banks and microfinance institutions reflect quality assets with low loan default rates and safe investment. Profitability indicators also remain positive and sustained. On the bank side, the return on equity is above 20%, at 21% at the end of June 2026, and also they registered positive return on assets. For microfinance, there was an improvement in the return on equity to 21%, and we believe that this profitability is another indicator that allow us to foresee a banking and microfinance sector that are resilient to potential external and internal shocks. Further to the analysis of credit institutions, the committee analyzed the stability of the insurance sector and pension sector. For the insurance sector, also remain resilient if we take the stability indicators in terms of solvency, the capital adequacy ratio well above the minimum required of 150%, the insurance sector posting as a whole a capital adequacy ratio of 248%. And in terms of liquidity, insurance companies are also above the minimum required liquidity ratio of 121%. And these indicators are on the back of a reduction in premium receivables that reduced from 41 billion in June 2025 to 35 billion at the end of June 2026, and this underpins the stability we're seeing in the insurance sector. In terms of profitability, insurance underwriting returns were on the rise, increasing to 8.3 billion, which reflects a decline in claims, particularly in the medical insurance, alongside improvements in premium pricing. And the decline in claims was also reflected across several insurance business lines, being motor, fire, and life insurance, which also recorded better underwriting performance. One concern was the expense ratio that grew and reached 35% in June 2026, driven by rising operational costs and an increase in overhead costs, which is a ratio that we will continue to monitor as supervisor of the insurance sector. The public pension sector continue to see an increase in contribution following the recent increase in mandatory contribution rates from 6% to 12%, with contributions expected to increase further when the rates further rise to 14% in January 2027. For benefits, they also increased by 34%, reflecting the upward adjustments in the pension minimum pension benefits decided by government also last year. Lastly, the Financial Stability Committee analyzed the payment system, with digital payment adoption continuing to strengthen, as reflected in the value of electronic payments relative to GDP, now reaching 341% in the first half of 2026, compared to a ratio of 321%. And retail payments, in terms of value, have reached 27.8 trillion. And we believe now that with the full migration to e-cash by banks, but also mobile money operators and some microfinance institutions, we will see more and more adoption of retail payments, thanks to the National Instant Payment System, e-cash. And we analyzed the impact of e-cash, particularly following the full migration to the platform as an interoperable platform in July 2026, and a very substantial increase in terms of volumes, increasing by 155% to 14.6 million transactions, while the value of transaction also increased by 25-fold, reaching 1.2 trillion in the first 2 weeks of the full migration to e-cash. Beyond the adoption, we also observed that in spite of some post-rollout operational challenges by some participants, the success rate of all transactions going through e-cash at the end of July was at 97.6%. And we continue as central bank to work jointly with all participating institutions, as well as our switch, to address any operational issues and improve service performance. In terms of active users of eCash, they have now reached about 4.7 million, demonstrating really growing adoption of the platform, but also adoption of affordable instant payments in Rwanda. One key concern in terms of risks that the Financial Stability Committee will continue to monitor is the fraud cases in financial services, because of the continued digitization of the financial sector as a whole. However, in the second quarter of 2026, we observed a decline of fraud cases from 4,128 to 2,879 cases. And the value of these fraud cases also reduced to 471 million. But as a Financial Stability Committee, it's not a decline in fraud cases. What we want to see is more resilient financial sector to fraud cases, especially fraud cases committed through social engineering, and this underscores the need to strengthen fraud prevention, customer awareness. And what are the risks to financial stability that the Financial Stability Committee will concentrate on? We are cognizant of key potential vulnerabilities and challenges to stability, despite the stability and good performance and resilience of our financial sector. And this is why we will continue to monitor the developments in terms of global geopolitical and economic uncertainty, with potential spillovers to the domestic economy, the concentration in credit and deposits that were observed in banks and microfinance institutions, as well as investment concentration risk, in non-bank financial institutions. And lastly, as I just mentioned, fraud, cyber, and operational risk as financial services become increasingly digital. And in response to these risks, the National Bank of Rwanda has taken targeted policy and supervisory measures to address identified vulnerabilities, including strengthening liquidity and credit risk monitoring, stress testing, enhancing oversight of investment concentration, as well as reinforcing fraud, cyber risk management. And we will continue to strengthen resilience across financial institutions while supporting the efficient delivery of financial services. And we do recognize that as a central bank, but also the Financial Stability Committee in particular, that in spite of volatile and complex global environment, in spite of the external and domestic shocks that are more recurring, especially in the last 6 years, the financial stability remains the foundation upon which trust is built, upon which sustainable growth, economic growth is enabled. And so as Financial Stability Committee, it is our mandate to ensure that we take appropriate and timely policy measures to safeguard the stability of Rwanda's financial sector. And we have now come to the end of our MPC and FSC briefing, and we are happy to take your questions. Thank you.
Thank you, Governor. And for this session, we'll do it in threes. Each media house is allowed one question for now to allow everyone to ask questions. So you'll start by telling us your name, your media house, and your question. And we request you to kindly abide by the one question per media house for now. So we see RBA, then Capital FM, and EGA for now.
Thank you so much. My name is William. I work with RBA. My question is, how far is the Monetary Policy Committee willing to raise the central bank rate before probability notices that the tightening is hurting the economy more than it is impacting inflation?
Good afternoon. My name is Juliana from Capital FM. Governor, several non-deposit-taking financial institutions in Rwanda have recently been closed. Could you please explain the main reason behind these closures and how many institutions have actually affected and what measures the National Bank of Rwanda is taking to protect customers to recover their funds where applicable and to prevent the similar issues later on in the future? Thank you.
Thank you, Governor. My name is Philbert. I work for EGA. Last year you said that the central bank would start buying gold from, I think, from July 2025. And I wanted to ask you, has that begun? And if so, how much gold have been acquired, and what share of that gold reserved to to Rwanda? What share of Rwanda's reserves does it represent? Thank you.
Governor, we hand over to you.
Can start with these three and then we take another round. So starting with the question from William, how far will we go with monetary policy tightening? Let me start by re-emphasizing that monetary policy tightening is not done to hurt the economy. It's the contrary. Because there's no economy in the world that can grow with a double-digit inflation. So the priority to make sure that we have a sustainable economic growth is to bring back our inflation within our target band. And for Rwanda, the research shows that the medium-term inflation rate, which is appropriate for economic growth, is 5%. And so that is why all our monetary policy is geared towards achieving that target in the medium term, meaning on average on 2-3 years, we should have a headline inflation of 5%. And so the reason why we have decided again to increase our central bank rate was to make sure that from the projections that we're seeing, the different scenarios that we have done, meaning we know that energy prices are still very high, they are likely to increase if actually this prolonged, the Middle East conflict is longer than expected. The first scenarios we had was for a period of 6 months. What would that mean for our inflation? Now we can see that actually that war might last longer than the 6 months because of the different, I would say, episodes, ceasefire, short-lived, and conflict remaining. Second, there's also second-round effects, because when you have oil prices increasing, then it impacts transport. You've seen that even in our country, public transport fares have increased. But there's also an impact on fertilizer, because fertilizer will also going, most of it, through the Strait of Hormuz. An increase in prices of fertilizer means impact on food prices domestically, but also globally. And so all those pressures taken together, we're seeing already that we've had 2 consecutive quarters with inflation above 8%, 9% in the first quarter, 13% in the second. July numbers were not reassuring, inflation now at 14%. And as a central bank, as Monetary Policy Committee, our role is to make sure that we bring down, using our monetary policy tools, inflation back to below 8%, which the monetary policy decision we have taken throughout the year, now having increased the central bank rate since November 3 times by 225 basis points. But that is not sufficient alone. Government measures are also very important, especially in an economy where the transmission mechanism, meaning central bank rate being translated directly into market rates, to sort of reduce demand and stabilize again inflation. And so that's why it was important for us to work closely with especially the Ministry of Finance, but also the government stakeholders, to have these measures that reduce the burden of higher energy prices. There are temporary subsidies on fuel, and making sure that we can all together collectively curb inflation. And so that is the reason why we shouldn't see monetary policy tightening as hurting economic growth. To the contrary, it's setting foundation for economic growth that's sustainable. Otherwise, the purchasing of power of Rwandan and Rwandan residents is actually, if it continues to erode, that's what will hurt economic growth. If our inflation is much higher than other countries in the region, then we become less competitive in selling our products on export markets. And so this monetary policy tightening is also making sure that we can go back to normalization of our inflation. The faster the better, to avoid more costly, I would say, policy measures. And so we believe that the tightening that we are, path that we're on, if there's no other shock, actually we should see inflation going back to the target range, and then there's no longer needs to tightening. So now it's too soon to say when it will stop or not, because as we said, there are uncertainties of how these inflationary pressures may evolve, especially now that we are starting season A of agriculture. But if the risk of El Nino was to materialize, we might have pressures on food prices, which we cannot quantify now. And that's why we are taking this measure now. And in 3 months' time, we will have more projections that will drive decisions of the Monetary Policy Committee. And so for the question on Capital FM, probably to clarify, there was no closure of non-deposit taking financial institution. Our notice was mainly to clarify what developments we've been seeing in non-deposit taking financial institutions, especially lending companies. So since we started licensing non-deposit taking financial institution, there has been a very rapid increase in the number of institutions. But also we realized that the requirements in terms of minimum capital were not adequate in terms of the appetite we're seeing with people taking loans from these lending companies. So the growth of the sector is something that is commendable, because there were a number of people that were not being served by either banks or microfinance institutions, being served now, especially for short-term loans, by non-deposit taking financial institutions. But after our review of the regulation, increasing the minimum capital requirement, we believed it was a time to temporarily suspend issuing more licenses to make sure that the risk management practices, governance in these new institutions that are growing very fast. You saw that their loans are growing at a pace of close to 50% year on year. So you need to be able to manage, train, make sure that risk management, governance, but also the products they're putting on the product are in line with our consumer protection in line. And so that's a temporary suspension to make sure we don't have new entrants without having stabilized existing entrants, which are more than 150 companies today. The question from Philibert on gold, you will have to be very patient to have the numbers, because our annual report is released at the end of October. But we can confirm that for the last financial year, we acquired gold. They are now part of our reserves. And in terms of proportion, we are in the, I would say, the range of gold that central banks globally have. It's on average between 10% and 15% of their reserves. But the numbers will be published once our audited financial statements are out in about 2 months' time. Thank you.
Thank you, Governor. We'll take another round of 3 questions. We have Umwezi, we have Mama Gasabo. Capital had asked, so we'll take Kigali today. You'll be patient.
But we can take 4 because there's a person who had raised the range, so that's fine.
Murakoze Governor, Vincent Gasana, Katie Press. Would you please explain again, I know this is explained several times, the effects of the slower transmission mechanisms in economies like Rwanda's, and what the main reasons for that, and if there is anything that can be done to perhaps speed it up. Thank you very much.
Murakoze nyakubahwa Gavana, nitwa Kamuzinzi Simon, nkorera radio Umwezi. Nanjye nifuje kubaza ku bijyanye na Kinyarwanda, mu duhe kasamari gatoya cyangwa se incamake mu Kinyarwanda y'impamvu yo kuzamuka k'urwunguko fatizo banke beneri heraho itangiraho amafaranga. Impamvu mwatanze twumvise nyine ari kubera gufungwa ry'umuhora wa Hormuz, ariko nayo bya El Nino, ariko turebye ku rundi ruhande biragabanya, biratuma abantu batabona amafaranga muri banke, niko umuntu yavuga, kubera ko bikiri ku 8.25% nabonye haragabanutse abantu basaba amafaranga muri banke, bagabanutse ngira ngo ni 15.3% ngira ngo sinibuka, sinabirebye neza hariya. Ubu ngubu rero sinzi icyemezo amafaranga muraza kuyaha abandi abakora ibiki. Wenda kariya kantu k'inzoga, guca izi nzoga z'ibyuma ku rundi ruhande byajyaga byinjiza nubwo bijyangiza ubuzima bw'abantu, ariko hari uburyo amafaranga muraza kuyaha abakora ibiki kugira ngo twumve niba amafaranga atazabura mu baturage. Murakoze.
Murakoze Gavana. Ndiskovia Mutesi. Nashakaga kubaza ku kijyanye, Beneri iravuga ko imari ihagaze neza mu gihugu, ariko ndashaka ko mudufasha kumva iyo muvuga guhagarara neza kw'imari mu gihugu, biba bivuga guhagarara neza k'ubukungu bw'abaturage cyangwa bw'igihugu, kuko mudufashe gutandukanya abaturage n'igihugu, cyangwa se niba tutaza gusanga dufite aho abashoramari bari hejuru n'umuturage uri hasi cyane, noneho kubihuza bikaba hagati harimo harimo ikiraro kinini gihuza abo bantu twumva izamuka ry'imari kuko ibigo bihagaze neza niba ari nako abaturage bahagaze neza baramutse badahagaze neza ibigo by'imari bihagaze neza haba hari kubiki abaturage bakora iki leta ikora iki kugira ngo guhagara neza ku bigo by'imari n'imari bihagararane n'abaturage icyarimwe ndabashimiye Madame Governor.
Thank you. My name is Jesse from Capital FM. My question is basically around lending. I have seen loans to sectors, energy and electricity, 3%, hotels, hospitality below that, and mining. Is there anything that explains why the percentages are very low and we have a huge campaign for Visit Rwanda, which is more about hospitality, and we have an electricity supply problem in the country? Number two, as a follow-up question.
Jesse, please, one question.
It's on lending. So I'm just
One
finishing.
question per media
Okay, it's
house.
AB. Should I stop there?
Yeah.
Yes, please.
Okay, fine. Okay, cool, thank you.
So let's start. So we had 4 questions with the question from Katie Press. Low transmission mechanism and what can be done to improve it. This I will ask our chief economist to comment on it. On the question from Capital FM on the sectors that are being financed by credit institutions, our head of financial stability can speak about it and then I'll complement. Ikibazo nahera ku kibazo mwezi Simon Muzinzi yabajije kusobanura mu ncamake impamvu y'impamvu akanama ka politike y'ifaranga kazamuye urwunguko fatizo rwa banki nkuru y'u Rwanda rukava ku 8.25% rukagera ku 8.75%. Icyambe nagira ngo sobanure nuko tutibeshya ko inguzanyo tumaze no kuzamura urwunguko fatizo rwa banki nkuru y'u Rwanda mu kwezi kwa gatanu inguzanyo ntago zagabanutse. Dusubiye kuri presentation aho twerekanaga uko inguzanyo zagiye zizamuka yaba inguzanyo zitangwa na banki cyangwa se ibigo by'imari biciriritse microfinance nuko zazamutseho birenze 22% mu gihembwe mu mezi atandatu y'umwaka kuva mu kwa mbere kugeza mu kwa gatandatu. Aho rero ntago bivuga ko iyo banki nkuru y'u Rwanda izamuye urwunguko inguzanyo mu baturage zigabanuka, ahubwo icyo tuba dushaka kwerekana nka banki nkuru y'u Rwanda nuko umuvuduko bizamuka ry'ibiciro urimo urazamuka cyane kurenga zambago za hagati ya 2 n'8% tuba twifuza kugira ngo tugire iterambere ry'ubukungu rirambye. Aho rero tugomba kuzamura urwo rwunguko kugira ngo tushobore kugabanya uwo muvuduko w'izamuka ry'ibiciro. Uwo muvuduko w'izamuka ry'ibiciro ubu tuzi ko watewe no kuzamuka cyane cyane kw'ibiciro by'ibikomoka kuri petroli bitewe n'intambara iri muri Iran no gufungwa k'uyu muhora, utazakomeza kuzamuka bitewe n'abantu benshi barimo gushaka inguzanyo bakazamura kuvuga gushaka ibicuruzwa byinshi, kuko uzi ko iyo demand irengeje supply cyangwa bifuza ibicuruzwa baruta ungano y'ibyo bicuruzwa ibiciro birazamuka. Aho rero niho tuba tugenda tugabanya uko kuzamuka kw'iyo demand kugira ngo nako kudatera umuvuduko uri hejuru cyane w'izamuka ry'ibiciro mu gihe hari izi shocks. Aha rero nakugira ngo nongere nkumare wenda navuga nkumari impungenge kuko imibare irerekana ko inguzanyo zizamuka, ndetse twanagiye twerekana ko muri sectors zitandukanye z'ubukungu cyane cyane izo dukeneye nk'igihugu kugira ngo tugire iterambere rirambye nizo zigenda zibona inguzanyo ziri hejuru, ndetse twanerekanye ko urwego rw'ubuhinzi twajyaga tubona ko rwagiraga inguzanyo ziri hasi ya 2%, ubu none izo nguzanyo ziyongera zikagera kuri 5%. Yego ntidusiragera ku kigero twifuza, ariko kuba no muri iki gihe tubona hari umuvuduko w'izamuka ry'ubukungu uri hejuru, tubona hari amashyamirane ku rwego rw'isi atuma ubukungu bujegajega kandi budakomeza gutera imbere ku rwego rw'isi, twagaragaje ko umusaruro mbumbe ku rwego rw'isi utaziyongeraho cyane nk'uko ari wiyongereyeho umwaka ushize, ariko biragaragara ko kubera uko ubukungu bwacu bwifashe mu Rwanda n'ingamba zagiye zifatwa kugira ngo sectors zitanga akazi, sectors zifite akamaro cyane ku rwego rw'ubukungu, haba hari sector y'ubwubatsi kubera imishinga minini myinshi hari, ndetse urabona ko n'abantu ku giti cyabo nabo bari muri sector 3 za mbere babona inguzanyo. Aho rero ni byerekana ko politike y'ifaranga itarimo gukora mu nkokora uko ubukungu bugenda buzamuka cyangwa sectors zikenewe kugira ngo ubukungu bwacu buzamuke ku buryo burambye. Politike y'ifaranga ibigira ngo tugabanye umuvuduko w'izamuka ry'ibiciro, kuko urenze zambago z'8% ugira ingaruka zikomeye ku bukungu mu myaka iri imbere, cyane cyane no ku bushobozi bw'umuguzi w'umunyarwanda, aricyo dushinzwe kurengera nka Banki Nkuru y'u Rwanda. Ibyo bavuga tusa amafaranga muzayahana, Banki Nkuru y'u Rwanda ntago iguriza abikorera cyangwa ibigo, ibyo bagurizwa na banki z'ubucuruzi. Ariko ahangaha icyagaragaye mwabonye yuko n'inguzanyo ubu ziri gutangwa ku kigero kiri hasi gato y'icyo twari dufite mu mezi 3 ya mbere y'umwaka. Bivuga ko banki icyo tuzisaba ni uguhitamo projet nziza, kutatanga inguzanyo zitazishyurwa, kandi mwabonye ko mu mibare inguzanyo zitishyurwa neza ziri hasi ya cya kigero tuba dushaka ko kitarenga cya 5%. Aho rero birerekana ko ubu banki nazo cyangwa se na microfinance zikomeje gutanga inguzanyo, kandi zirinda inguzanyo zajya muri bya bigo cyangwa mu bantu badashobora kuzishyura neza. Aha rero niho duhera tuvuga ko hari ubutajegajega bw'urwego rw'imari, iyi nguzanyo zishyurwa neza, ibigo by'imari bifite imari shingiro ifatika, ku buryo habaye shoke cyangwa igihombo cyaturuka ku kigo cyaba kitishyuye neza biba bifite amafaranga ahagije ku buryo uwizigamiye ufite deposit muri banks ashobora agira icyizere ko ayo mafaranga nayo arinzwe neza. Kuko duhuza ni ikibazo cya mama cya Scovia Mutesi, mama w'u Rwagasabo, ubutajegajega bw'urwego rw'imari, inyungu tubona mu rwego rw'imari n'umuturage, twavuga ko ntago wabitandukanya, kuko burya iyo hari ikigo cy'imari gihombye n'uwakibikijemo arahomba. Niyo mpamvu twe iyo tureba ku rwego rusange rw'imari, kuba tubona yuko yaba amabanki, yaba ibigo by'imari iciriritse, yaba ibigo by'ubwishingizi bidahomba, byo ni ukuvuga ko ari uwizigamiye, ari uwafashe insurance niwe tuba tureberera. Ntago umuntu wafashe insurance yakora accident ngo ntashobore kubona ubwishingizi kandi yarabwishyuriye. Niyo mpamvu icyo kigo tuba tukirebera ngo tutajegajega. Umutungo wacu aho ubitse hagomba kuba harinzwe kandi hizewe, mu gihe ukeneye amafaranga yose wabikije ukayabona. Aha rero niho tuvuga ngo inguzanyo yego zituma umuntu yiteza imbere, ariko inguzanyo zajya mu kigo zaba zitanzwe nabi, ikigo kigahomba, inguzanyo ziva muri za deposits tuba twatanze, ni ukuvuga ko twaba dufite ibyago by'uko na deposits washyize muri icyo kigo cy'imari utazibona, kuko uwatwaye inguzanyo atazishyuye. Ni ukuvuga ko niba umuntu yafite deposits tuvuge za $1,000,000, banki igatanga ibihumbi 800 ku nguzanyo, iyo nguzanyo ntiyishyurwe neza, wa muntu aje gusaba ya mafaranga miliyoni, ikigo nticyashobora kuyamuha. Nari ngerageje gutanga urugero rworoshye kurwumva. Niyo mpamvu twe mu kanama gashinzwe ubutajegajega bw'urwego rw'imari, iyo tureba ku mabanki tuba tureba ese ayo mabanki uko ari gukora, deposits zirimo umuntu wese azishatse wazishyizemo yayabona. Ubukungu rero ntago tuvuga ngo iyo ubukungu bwiyongereye nanone ku 10%, ubukungu bwari muri muturage w'u Rwanda bwiyongereye 10%, ahubwo ni navuga impuzandengo y'ubukungu bwose, bigaragara ko burimo gutera imbere, kandi buri muturage niho azabona ayo mahirwe yo gutera imbere mu bukungu. Ibyo bintu mubona mu myaka irambye. Icyo navuga nuko ufite ubukungu budatera imbere, ni ukuvuga ko GDP growth cyangwa umusaruro mbumbe w'igihugu utiyongera, ukagera n'ibigo bimwe by'imari bihomba, umuturage ahahombera kabiri, kuko hari ibigo mu bukungu butiyongera, hari ibigo byafunga aho yari afite akazi. umutungo cyangwa ibyo yizigamiye bikaba biri mu kigo cy'imari kitacunzwe neza cyangwa cyatanzwe inguzanyo zitishyuwe neza, n'ubwo bwizigame ntashobore kububona uko yabutanze. Aho rero niho tubona ko umuturage nubwo iyo izamuka ry'ibiciro icyo tubona ni icyo cya buri munsi, ariko ku rwego rurambye cyangwa on long term, icy'ingenzi ni uko umuturage aba afite icyizere cy'uko aho afite akazi, amahirwe menshi ni uko icyo kigo akorera gikomeza kuba gikora neza ntabura akazi. N'ubukungu iyo bwiyongera ni ukuvuga ko ari akazi kandi kagenda kaboneka, kandi imibare yerekana abantu bafite akazi mu Rwanda yerekana ko bakomeje kwiyongera nubwo bitarajya ku cyagero twavuga ko gishimishije. Kuba nk'u Rwanda tufite iyi vision yo kuvuga ngo turashaka kuva mu bihugu bivuga ko bifite ubushobozi buke, low income countries, tukagera mu bihugu bifite bikize, high income country, ntabwo igihugu cyakira atari abaturage bacyo bakize. Aho nemeranya nawe ni ukuvuga ngo ese harimo inequality. Aho nanone turongera tukareba ya mibare yo kugabanya ubukene. Tuzi ko mu myaka navuga 32 ishize 78% by'abanyarwanda bari mu cyiciro cy'ubukene, ubu ni 27%. Aho rero ntabwo twavuga ko umuturage nta kintu kiyongereye mu bukungu bwe, nubwo hari abo 27% nabo baracyari benshi, kandi intego ni uko mu 2029 icyo kigero kizaba cyagabanutse ku 15%, ndetse kikagenda kigabanuka ku buryo buri muturage aba afite icyo twita minimum living standards yizewe, noneho uko ubukungu bwiyongera nawe akagenda abona amahirwe yaba yo gushora imari, ayo kugira akazi, ndetse naho abikije umutungo we hakaba hizewe. Ariyo mpamvu akanama gashinzwe ubutajegajega bw'imari tugomba gukurikirana uko ibyo bigo b'imari bikora, ndetse hakaba n'agashami gashinzwe kurengera umuguzi wa serivisi z'imari, ako nako gashinzwe kureba ko serivisi uko zitangwa zitahenze ku buryo burengeje uwo muturage, kandi ko nta bigo by'imari birimo kuryamira uwo muturage, nubwo tubona hakirimo bimwe bikomeje kunozwa, ariko kuba harabayeho itegeko kuva mu 2021 birengera umuguzi wa serivisi z'imari, hakaba akashami muri beneri gashinzwe kubikurikirana. Navuga ko ibyo bintu navuga bitandukanye bine: kudajegajega ku rwego rw'imari, ubukungu bwiyongera, kurengera umuguzi, no gukomeza kubungabunga umutungo no kwizigamira kw'abanyarwanda, no kugabanya urugero rw'ubukene, ari ibintu twavuga ko byerekana ko umuturage w'umunyarwanda atasubira inyuma, ahubwo ko ubukungu bwiyongera nawe abibonamo amahirwe. So I'll go back to you, Thierry, for the transmission mechanism, then Bernard on the financing of sectors, priority sectors.
Thank you, Governor. Thank you for the question. We'll try to be brief, even if that's something that requires a long session. Transmission of monetary policy can be explained very simply from what the central bank decides as the central bank rate and how it is affecting the economy. So as the Governor mentioned, it goes all the way through what we call aggregate demand, which then affects the general level of price or inflation. That's the objective that you want to achieve. So there are different ways to go there. There are like 4 different channels. We talked about the interest rates channel, bank lending channel, exchange rate channel, and finally expectation channel. I'm not going to go into all these details, but the transmission is slow in most of these channels for 3 reasons. One is the high level of informality of our economy. The more people are in the formal sector, the more, of course, they go to the financial sector, and the more interest rate matters to them. We have financial literacy, and I'll put also financial inclusion related issues, and shallow financial market. These are not issues only for Rwanda. Actually, it's for the entire region, it's for the entire Sub-Saharan Africa. All central banks in Sub-Saharan Africa, except for maybe a few of them, in the category of low-income and middle-income countries, struggle with this, because at the stage of development they are in, they have these issues that limit the transmission from the central bank rate to the inflation at the end of the day. Doesn't mean that it doesn't work. It means that it actually takes more time to affect the economy than in advanced economies, where it takes just a few days. The transmission, different research that we did, I can also point you to our BNI economic review, where we have several papers talking about this. The transmission on average goes up to 12 months. So this is why it's even more important for us to forecast, to anticipate, and to take decision in anticipation, because we know it takes time to affect the economy. How to solve that? Basically by solving all these issues that are structural. So it takes time. It will take time, but it is already, we're seeing some progress. That's why BNI is actually investing a lot in financial. We have a financial inclusion department. We have activities, and every year we contribute to financial education and making sure that we have more people included in the financial system. This is how, at the end of the day, our transmission will be improved. Thank you.
Thank you, Governor. On the question related to how these priority sectors are financed, as we indicated, we saw that mining and hotels, but also energy are less financed. But you have to remember that financial institutions have to lend prudently and where the risk is low. However, what we have done in terms of assessing why these sectors are not well financed, our survey highlighted around 4 key challenges, mainly in terms of corporate governance issues in these companies. The second is the lack of transparency and financial disclosures, but also the ineffective financial management. Those are the key challenges we saw in terms of assessing why these sectors are not financed. But as you saw in this month, Central Bank is engaging with private sector federation to discuss these issues and also to see how these issues can be addressed, so that these sectors can be, these issues can be addressed, but also this company can access financing. That's what I can say, Governor.
Thank you. Let me add probably a few comments on energy specifically, and then mining. So we need to remember these statistics are for companies that actually go to banks, commercial banks or microfinance to get loans. But for large energy projects, they are in our country still financed mostly by multilateral financial institutions, the likes of World Banks and the likes. Second, we've seen that private energy companies are the ones now going to capital markets to raise funds. And so if you issue a green bond, you will get financing, but you're not being recorded as lending. So this, on the energy and electricity sectors, there's still government financing, the multilateral development banks financing, as well as capital markets. And so it might seem as if energy is not being financed, but it's not being financed by banks because there are older, larger lenders that are financing these energy and electricity projects. On mining, there's also been some banks that had financed in the past mining projects that unfortunately were non-performing, and they retrieved for that sector. And they are now building more capacity because it requires more sophistication lending to a mining company than, let's say, households. And so they are building capacity also on understanding better the risk and being able to finance mining locally. But we have to remember that mining being a more global sector, there are also players outside of Rwanda that are able to finance it at better terms because of the, I would say, the skills they have built. And so these numbers will be schooled. It doesn't mean that mining companies are not financed, but the domestic portion of their financing is still low. But as we build more capacity in our commercial banks, we also are likely to see more mining being financed locally. But it takes long to really build, I would say, a mining desk or a commodity desk in a bank and be able to finance it prudently, as Bernard mentioned. So we'll take the last round of questions.
We'll take Sol, the lady in blue, and B&B. I don't know whether you can take 4.
can close.
So we'll take Sol, the lady in blue, BNB, and this person. Thank you.
Thank you, Governor. My name is Saul Gutera, the managing editor of the Kigali Financial Journal. Looking beyond the current inflation rate, what is the single biggest risk could derail the bank's disinflation path for over the next 12 months? And with the policy rate at highest level in these years, how much more tightening can the economy absorb? Thank you.
murakoze cyane.
Murakoze, nitwa Munezero Jean d'Arc, nkuriye ikinyamakuru Panorama. Nagize ikibazo kijyanye no ku buhinzi. Tuzi ko mu bimwe mu bizamura ubukungu bw'igihugu harimo n'ubuhinzi, ariko mu bigaragara inguzanyo yo mu buhinzi ntabwo birazamuka cyane, byavuye kuri 2 bigera kuri 5. Ese ko abahinzi bigaragara ko batitabira gufata inguzanyo kugira ngo nibura n'abaturage bataka ko ubukene binazamuka cyane bahinga, ese byaba biterwa n'inyungu nyinshi ibigo by'imari bibasaba cyangwa byaba biterwa n'imihindagurikire y'ikirere? Murakoze.
Murakoze cyane. Nitwa Desire Bizimana, nkora kuri Mama wa RwandaTV. Hari ibyo mwagarutse ku bijyanye na e-payment, kwishyura hakoreshejwe ikoranabuhanga, mugaragaza ko byazamutse ku kigero cya 341%, kandi munagaragaza ko kwishyurana bimaze kugenda neza ku kigero cya 97%. Haracyabura 3%. Nizihe mbogamizi zihari, nizihe ngamba mufite nka Banki Nkuru y'u Rwanda kugira ngo izo payment zigere ku 100%? Ikindi ni ukugira ngo mushyire mu Kinyarwanda icyo mwari mwagarutseho kijyanye, hari ibyo bagaragaje kijyanye n'ibigo by'imari bidatanga serivisi zo kubitsa, ahubwo bitanga inguzanyo, aho hafunzwe nkuko biri mu itangazo byafunzwe by'agateganyo kwakira ibishya. Ariko mu baturage hari ikibazo muri biriya bigo bijyanye n'uburyo bishyuzwamo amafaranga n'ay'ingwate ntibayabasubize. Ese haba hagiye hazakurikiraho no gufunga n'ibyari bihari, cyangwa muragira ngo mukemure n'ibibazo byari biri muri ibyo bigo bindi mbere yo gufungura ibindi? Murakoze.
Murakoze. Nitwa Mutoni Beata, nkorera BNB Kigali FM. Mama wa Rwagasabo yarabigarutseho, ariko hari imbogamizi abantu bakoresha e-cash bamaze iminsi bagaragaza ko mu mabanke, sinzi niba ari ikibazo kiri mu mabanke, donc umuntu ashobora kuba agiye kwishyura bikamara umunsi wose bitarakora, kandi ugasanga umuntu ntiyanagendanye amafaranga kuko ni cashless. Ese harakorwa iki kugira ngo uru rwego, kuko abantu bararwishimiye, nawe utarwishimira agerageje n'amafaranga yakatwaga arimo kohererezanya, harakorwa iki kugira ngo bigende neza kurushaho, ku buryo umuturage yizera ati njye nimba ngiye kwishyura nta kibazo ndi bugire? Murakoze.
So, on the question, tujyana tubisubiza mu byiciro n'abagenzi banjye baramfasha. Ku kijyanye na policy rate absorption, is in English. I will ask also our chief economist to explain. I had already touched upon it, on whether there will be more tightening. Second, ikibazo kijyanye no inguzanyo zijya mu buhinzi, cya Munezero wa Panorama, nasaba nanone Bernard ushinzwe financial stability kugisubiza. Hanyuma ku kibazo bijyanye na e-cash byari bibiri, hari bya Desire wa Mama wa Rwagasabo, ndetse ntabwo numvise neza BNB. Yego, ubwo Fabrice ushinzwe payment system yaza kubigarukaho n'ikirimo gukorwa. Hanyuma ku ngamba zafashwe mu kubanza kugenzura neza ibi bigo bitanga inguzanyo ariko bidafata amafaranga. Sinzi niba Blandine ushinzwe agashami ka non bank financial institution yaza kubigarukaho, ndetse n'ikiri gukorwa mu mbogamizi z'abavuga ko iyo bishyuye batabona izo nguzanyo, batabona amafaranga cyangwa batabona ingwate batanze. So we'll start with you, Thierry.
Thank you. I think the governor already touched on that, but what I can add is Of course, the central bank rate is the main tool we have for monetary policy, which is the mandate of the central bank. It can be increased, it can be maintained, it can be reduced. So right now we're in a situation where since November, as the governor mentioned, we started the tightening cycle. Actually, we accelerated it in May when the energy crisis started, and we saw very significant impact on our inflation. Cumulatively, it is more than 200 basis points now, so you can say 225 if we start from November. We had 25 basis points, February 50, May 100, now again 50. That's a tightening cycle to address the issue we are seeing, which means growing inflation and inflation increasing now in the near future, and the objective is for inflation actually to reduce next year, because as we're talking about monetary policy transmission, we're not talking about inflation of this year, we're talking about inflation of next year. It's the most important. How can we have this inflation stabilize first and reduce, gradually going back to our band? That's the reason why the decision has been taken to increase the central bank rate now. So we are not seeing it in terms of what is the maximum or how far. There's no problem on the economic side. If you look at the entire macroeconomic analysis that was presented today, we have stability on the external side. We have stability and even very significant economic growth domestically. In the first quarter of 2026, GDP grew by 10%. We expected the GDP to grow by 6.8% this year. It can even be higher from what we are seeing. The global economy is slowing down. The sub-Saharan African economy is sort of stabilizing. The crisis is affecting everyone, but in this context, Rwanda's economy is still growing. So there's no really concern. There's no real concern that tightening monetary policy would affect that, at least in the short and medium term. This is what we're seeing. So there's room, and that's why a decision to tighten was taken, to affect prices, inflation of next year, so that we keep growing again next year and the year after. Because if inflation stays like this for a few years, then this economic growth will not continue. That's what I can add. Thank you.
Thank you, Blandine.
Murakoze. Ku kibazo cy'umunyamakuru wa Mama Rwagasabo kijyanye n'icyemezo Banki Nkuru y'Igihugu yafashe mu kuba ihagaritse by'agateganyo ibi bigo bitanga inguzanyo bitakira amafaranga y'abaturage, nibyo koko byahereye ku bwiyongere bwabyo nk'uko mwabibonye, uretse no kuzamuka kw'amadeni inguzanyo batanga, ariko byaraniyongereye nabyo. Muri uko kwiyongera rero usanga hari ibibazo bimwe nk'uko mwabivuze, hari imbogamizi ababigana bagenda bahura nabyo. Kugira ngo dufate iki cyemezo cyo kuba tubihagaritse by'agateganyo mu mezi 6, no kugira ngo tububakemo ubushobozi, tubafashe kwiyubaka uburyo bayobowe, uburyo bubahiriza amategeko, kugira ngo bagire ibigo bitajegajega. Nta bindi bigo biteganywa gufunga, ahubwo ibihari turashaka kubifasha kugira ngo byiyubake neza, bitange na serivisi uko tubyifuza. Murakoze. Uyu munsi dufite ibigo 330. Muri ibyo bigo 85% ni ibitanga inguzanyo. Murumva uburyo ari byinshi. Turashaka rero kubafasha kwiyubaka kugira ngo bafate umurongo hamwe. Fabrice.
Murakoze nyakubahwa Gavana. Ikibazo cyabajijwe n'umunyamakuru wa Mama Rwagasabo ndetse na BNB nagira ngo ntangire ntanga umucyo, ngira ngo nk'uko nyakubahwa Guverineri yabisobanuye, ukwitabira gukoresha kwishyurana ukoresha ikoranabuhanga byarazamutse, ariko by'umwihariko iyi serivisi ya e-cash yaje yunganira serivisi zayisanzwe ziriho, ndetse ituma n'ubwitabire bwiyongera ku kigero gishimishije cyane. Ngira ngo yagiye agaragaza ko mu gihe kingana byibuza n'iminsi 90 cyangwa iminsi 30 twavuye kubakoreshaga uyu muyoboro uva hafi kuri miliyoni 3 nk'uko mubibona mu kwezi mu mwaka wabanjirije, mu kwezi kwa kubanjirije tugera kuri miliyoni 4 z'abawukoresha, ndetse no mu mibare tugenda tubona ko byibuza ku munsi uyu muyoboro wanyuragamo ibikorwa bingana n'ibihumbi 102. ariko nyuma yo kunoza uyu muyoboro ugahuza ibigo by'imari bitanga serivisi ya e-cash ku munsi hanyuramo bikorwa bingana na miliyoni 1 ndetse no kuzamura hejuru. Ibi bivuze ko rero uyu muyoboro watumye ubwitabire buzamuka ku kigero gishimishije cyane. Iyo tuvuze rero ko ibikorwa byanyuzemo neza ku kigero cya 97.6, bishaka kuvuga ni bya bikorwa byanyuzemo nta mbogamizi. Amafaranga yavuye kwa yohereje kuri konte, yaba ari mobile money, yaba ari konte ya banke, yaba ari konte y'ikigo giciriritse cy'imari, acyohereza ku wundi muntu uri muri banki cyangwa se mu kigo gitanga serivisi za mobile money, yamugezeho nta mbogamizi nta nkomyi ku kigero cya 97.6%. Hariya nicyo kigero dushaka gusobanura. 2 n'ibice birengaho biri kubura ni imbogamizi twabonye nyuma yo gutangiza uyu muyoboro. Ahanini zari zijyanye no kumenya gukoresha uno muyoboro, kuko wabonaga ko abasanzwe bitabira kwishyura no gukoresha ikoranabuhanga bakoreshaga zino serivisi za mobile money cyane. Habayeho rero ubukangurambaga gusobanurira abantu ko bidasaba kwiyandikisha, ahubwo bisaba gukoresha n'ubundi serivisi bari basanganywe. Ikindi twabonyemo nuko abanyarwanda benshi cyangwa se abagana izi serivisi batari basanzwe bakoresha imiyoboro y'amabanki cyangwa se za microfinance. Ahangaha naho habayeho gufatanya n'ibigo bitanga serivisi z'imari kugira ngo bikangurire abakiriya babo kugira ngo babashe kubyegera babafashe, kandi nabyo byagiye bizamura. Ikindi cyiciro twabonyeho imbogamizi gitoya ni ikijyanye no kwagura system cyangwa se ihuzanzira hagati y'ibigo by'imari ndetse n'ikigo cya R-Switch gitanga serivisi ya e-cash, aho nk'uko nabivuze ubwitabire no gukoresha iyi serivisi bwiyongereye, byabaye ngombwa ko bisaba ko habaho kwagura uyu muyoboro kugira ngo abantu bayikoresha ari benshi. Igikorwa umuntu yakoze niba yoreza amafaranga ava kuri konti imwe ajya mu kindi kigo kibashe kugerayo nta nkomyi. Ngira ngo wenda nkomerejeho ni ikibazo cyabajijwe na mugenzi wawe muri BNB, nabyo biruzuzanya. Nibyo koko tugitangira nyuma y'itariki 14 z'ukwa karindwi mu cyumweru cya mbere, twabonye ko hari abakiriya bagiye bagorwa no kubona iyi serivisi ya e-cash baganaga ndetse no mu mabanki yabo, ariko ahanini bagiye bahura n'ibibazo navuze haruguru nta biramo. Gusa nka Banki Nkuru y'u Rwanda nk'uko dusanzwe dushinzwe gukora ubugenzuzi, twakoze ubugenzuzi mu bigo by'imari byose, tubona ahanini nuko abenshi batari bafite umuyoboro cyangwa se batari bariyandikishije gukoresha umuyoboro w'amabanki yabo cyangwa se ibigo by'itumanaho. Ikindi nanone cyagaragaraga cyane ni ukuba batarazamuye ubushobozi bwa systeme nk'uko nari nabivuze haruguru. Nka Banki Nkuru y'u Rwanda rero icyo turi gukora uyu munsi turabikurikirana mu buryo bw'ikoranabuhanga. Ngira ngo mbere yuko tuninjira muri iki cyumba nari narebyeho mu buryo bw'ikoranabuhanga twe tugeze ku kigero cya 98%. Bivuga ko uko dukomeza kubasuzuma no kubakurikirana, iki gikorwa kizageraho kigere no ku gipimo twifuza aricyo 100%, ku buryo umuntu weje amafaranga yagerayo nta nkomyi, atongeye gukoresha amafaranga mu ntoki mu buryo kuyagendana. Murakoze gabana.
Nagira ngo mpe n'ijambo Deputy Governor agira icyo yongeraho kuri e-cash, nuko tuyikurikirana nka Banki Nkuru y'u Rwanda ndetse n'icyo tuyitezeho mu minsi iri imbere.
Murakoze Governor. Ibisobanuro Fabrice atanze ibisobanuro byumvikana nk'uko avuze. Ubu hagiye gushira ukwezi iyi service ya e-cash itangiye, iri mu guhuza financial service providers bose. Biri mu kugaragara yuko abari mu kwigana umubare uri mu kuzamuka bigeze kuri abantu 4,700,000. Wareba transaction ku munsi ziri mu kwiyongera. Byumvikana rero nk'ikintu nka platform nshya itangiye kuba turi ku gipimo cya 97.6 ni igipimo cyiza, ariko ntabwo ari cyo twifuza yuko rimo cyakura. Nuko babwiye uyu munsi bigeze kuri 98. So turifuza yuko cyazamuka kikagera ku 100. Kubahumuriza no kuvuga yuko Banki Nkuru y'u Rwanda ikorana n'abatanga services z'imari ni ibintu turi mu gukurikirana buri munsi. Hari ikipe ishinzwe kureba yuko iyo service iri mu gutangwa, nuko aharamutse havutse ikibazo y'ukuntu gikemurwa byihuse. Nk'uko namwe mwabivuze, e-cash tuyitezeho byinshi, tuyitezeho kureba yuko mu kunganira platform zindi zari zisanzwe zihari igabanya igiciro, yongera umuvuduko kandi kanafasha ibigo by'imari byose biri mu gutanga services z'imari yuko bikorera kuri platform byose bihuriraho. Nibyo bintu tuyitezeho. So twabahumuriza tubabwiye yuko ni ibintu turimo gukurikirana buri munsi, turimo kubona iriya percentage iri mu kuzamuka, turizera yuko uko iminsi iri imbere bizagera ku gipimo twifuza. Murakoze gahunda.
Niba hari uwari ufite ikibazo cya nyuma hanyuma tukaba twasoza. Murakoze kunyibutsa.
Arakoze nk'uko yavuze inguzanyo zijya mu buhinzi ziracyari nke, ariko nk'uko twabibonye mu mibare turabona nibura amabanki n'ibigo by'imari iciriritse birimo byaratangiye gutanga inguzanyo ku buhinzi, byongereyeho hafi 175%, 177%. Akari iriya mibare ubona yuko noneho byavuye kuri hafi 2.5 bigera kuri 5%. Ariko hari icyo wavuze nk'impungenge zihari amabanki akunda kuvuga n'ibigo by'imari, wabivuze neza, imihindagurikire y'igihe nayo iri mu mbogamizi, ariko cyane cyane no kubona amakuru y'umuhinzi. Amakuru y'umuhinzi kuva yakwitegura guhinga, gutera no gusarura, nabyo biri mu mbogamizi ziba zihari kugira ngo barebe koko cash flow ye niba ishobora kwishyura inguzanyo. Ikindi ni ingwate. Ingwate naye hari ukuntu itera imbogamizi ku bigo by'imari kugira ngo kudabasha gutanga inguzanyo ku bahinzi, ariko nanone harimo n'ikindi cy'ubuhinzi bw'umwuga, kwizera yuko ubwo buhinzi bushobora gutanga kwishyura n'inguzanyo. Ariko ibyo byose iyo ubirebye ndetse n'ubwishingizi, ibyo byose ubirebye ni imbogamizi ziba zihari, inzego zitandukanye zirabizi. Ariyo mpamvu uyu munsi bene n'izindi n'abandi bafatanya ibikorwa barimo kureba ukuntu hajyaho platform yo kumenya amakuru yose y'umuhinzi kugira ngo na banki zimwizere kugira ngo zimuhe amafaranga. Ikindi nanone kugira ngo n'inguzanyo yihute guhabwa umuhinzi. Hari igihe byamara igihe ugasanga wenda afashe inguzanyo bagiye kuyimuha yaratangiye igihe cy'ihinga cyararenze. Ibyo rero turimo kubisuzuma kugira ngo nibura ayo makuru yose aba ahari, ariko n'igihe cyo kumuha inguzanyo bihure n'igihe cyo guhinga bikemuke. Numva rero inzego ziri gukorana kugira ngo n'ibyo bibazo byose bikemuke, kugira ngo n'umuhinzi abone inguzanyo mu bigo by'imari. Murakoze.
Twagira ngo twongere tubashimire kuba mwitabiriye iki kiganiro, ndetse tunabashimira ko mukomeje kuba abafatanyabikorwa badufasha gukomeza gutanga amakuru yaba kuri politike y'ifaranga ndetse n'ubutajegajega bw'imari, cyane cyane muri iki gihe aba ari igihembwe twongeye guhura nk'akanama ka politike y'ifaranga ndetse n'akanama gashinzwe ubutajegajega bw'imari, kandi tunakomeza kurushaho gushishikariza abanyarwanda kwitabira serivisi z'imari, kubaha icyizere ko zitajegajega, ariko nanone twumva n'ibibazo namwe muba muhagarariye abaturage, niko navuga, mutubwira ibibazo babagezaho kugira ngo dukomeze tubasobanurire iby'ubukungu, ibyo banki nkuru y'u Rwanda ishinzwe, icyo politike y'ifaranga ivuga, ndetse twese tunafatanye hamwe, yaba inzego zibishinzwe ariko cyane cyane na buri munyarwanda yumva ikirimo gukorwa kugira ngo uyu muvuduko w'izamuka ry'ibiciro wongere ugabanuke ugere kuri za mbago twifuza hagati ya 2.8%, kandi twizeye ko nk'uko imibare bigaragaza mu mwaka utaha tuzongera kubona ko uwo muvuduko w'izamuka ry'ibiciro wagabanutse kubera ingamba ziba zafashwe kuri politike y'ifaranga n'ingamba guverinoma ikomeza gushyira mu bikorwa kugira ngo uwo muvuduko w'izamuka ry'ibiciro udakomeza kurenga izo mbago cyane. Twongeye tubashimiye kuba mwitabiriye iki kiganiro, tubifuriza umunsi mwiza. Murakoze. Thank you.